Okay, I think we have everything all set up. So we are going to go ahead here and start with let me get the beard all set up here. So I will answer questions, but I am going to be paying attention to what this is, and I will look over for questions and stuff at the time. So if you have it. But this is the weekly market recap for the trading week ending July 10th, 2026. This stream is for educational purposes. It is not advice. I will be covering a multitude of different things today. The first four funds I'm covering are Vanguard funds. I do have some bias. I worked there for 13 years. I know what's in these funds. I'm not telling anybody to buy them. I just know what's inside of them and I am comfortable with them. But we're going to cover the publicly traded US and international stock and bond markets, go over their performance for the trading week, as well as some precious metals, Bitcoin, and oil. So the first fund we're covering today is the Total US Stock Market Index Fund, or VTI. Over the trading week, it was up 1.07%. The Total International Stock Index Fund, or VXUS, was up 0.59%. These charts, and all this information is coming from Yahoo Finance. These charts are a little bit hard to read, but if I've gotten this correctly, the trading week begins when the market opens, even though you can't really see it right at 9 o'clock compared to where it ended. So the chart looks like the market was down, but this was some pre-market trading prices, and then it opened and then it closed. So the Total International Stock Market Index Fund, or VXUS, was up 0.59%. The Total US Bond Market Index, or BND, was down 0.47%. And then the Total International Bond Index Fund was down 0.33%. So overall, not huge moves either way. This is a typical week, I'd say, in the markets. You're not going to see drastic moves. There was no big news that would move the markets one way or another. We will get to oil in a little bit, and those prices may have moved up due to new strikes on Iran, but we'll cover that in a little bit here. So let's go ahead and move over to gold. Gold was essentially flat. It was up 0.02%. But tracking gold, it has been flat for a while. But as you look down at its 6 month, it's down over 8%. Year to date, so for the whole year, it's down almost 6%. Even though when you look at it over the course of one full year, so last July to now, it's up over 24%. And its 5 year, it's up over 127%. So if we look at silver, silver was down almost 0.8%, 0.79. Its 1 month is down almost 7%, 6 month down almost 24%, and year to date, it's down over 22%. But when you look at it over its 1 year, it's still up over 62%. If we look at the 5 year, it's up 129%. So it is still up. And we're going to get into the reason why you would invest in these things at the end of the recap here. So if we look at copper, copper was up 2.74%, which is very interesting. And we'll go over why I look at copper in the first place. So the 1 month, it's up a little over 0.5%. 6 months, it's up over 7%. So this is different. And year to date, it's up almost 10%. And this is different than the other two precious metals that have a little bit more fame and notoriety. But its 1 year is up significantly less. The reason I bring up copper in addition to gold and silver is copper is starting to catch some popularity in smaller circles because its use case has increased with AI data centers and other things that need copper. I believe the prediction is we're going to need almost as much copper as we've ever used to this point. We're going to need in history, we're going to need as much over the next 20 or 30 years. So there's potential for upside in copper, although I wouldn't make purchases or anything based on that. Precious metals are generally market retainers or value retainers over history. They're not there to make you rich, they're there to preserve your wealth. So if you have questions over this or anything that we covered today, put them in the comment section, or we could set up a conversation that we can have on stream to help multiple people. But now let's get into the fun one, Bitcoin. So over the last 5 days, and Bitcoin's a little bit different. It's traded 24/7. So this 5 days is over the actual last 5 days, not just the trading week, but it's up 0.19%. Over 1 month, it's up almost 0.9%. For its 6 month, it's still down over 29%. Year to date, it's down almost 27%. Its 1 year is down almost or over 45%, but its 5 year, it's up almost 87%. So I bring up Bitcoin because a lot of people talk about it as a digital gold value retainer, things like that. Over the last year plus, it has not reacted and performed in the same way as precious metals, which are historical value retainers. So Bitcoin is an interesting conversation. It's probably way too deep to get into here, but you want to understand for any of these things that you're investing in, why you're investing in it. Because there's always going to be noise around what's happening in the markets, why something is performing the way it's performing, and you have to be able to shut out that noise. If you understand why you're invested in what you're investing in, then what is said in the news, what your friends say, what your family say won't matter. So you have to understand and come to terms with why you own what you own. And I'll get into the stocks here in a moment. Let's go over the last piece here. But crude oil was up almost 4% at 3.96%. But for the month, it's down over 20%. For 6 months, it's up over 20%. Year to date, up over 23%. 1 year, it's up over 7. But it's 5 year, it's actually down 4%. So these things matter. History doesn't repeat itself, but it often rhymes. So you want to be paying attention to these things all at the same time, if at all possible. But once you understand why you're invested in what you're invested in, you can actually begin to ignore that stuff as well. Because to give you an example, I'm an aggressive investor, at least traditionally. So my portfolio is 100% stocks. I don't recommend that for most people, but I have the comfort level that if the stock market drops 90% tomorrow, I'm not going to sell. I'm actually going to probably sell some of my possessions to buy more shares of stock because I believe eventually markets will not only recover, they will reach new highs. I jokingly refer to myself as a perma bear. I'm sorry, a perma bull. I believe the stock market will continue to reach all-time highs, whether that's 1 year from now, 5 years from now, 20 years from now, 30 years from now, whatever it is. I believe the markets will recover and eventually reach new all-time highs unless the world comes to an end. And then we have bigger fish to fry. Now, I do want to cover a little bit about why I look at these 4 funds. The total stock market, total international stock market, total bond market, total international bond market. Those 4 funds cover essentially the entire world's publicly traded stocks and bonds. If you're building a portfolio, we don't know what one company is going to do, what one sector is going to do. So in my mind, a lot of people should probably own everything and then dial back from there. Maybe not own everything, but start from there and then figure out what they want to own. Because a very popular fund for the last, I don't know, decade plus has been the 500 index fund. I don't know if Warren Buffett is the one you want to give credit to for popularizing the 500 index fund, but it has actually outperformed the total stock market index fund for a decade plus. Historically, small caps have outperformed large caps because a small cap has to grow to become a mid cap, which then has to grow to become a large cap. But that has not been the case over the last 10 years. Large caps, particularly about the top 10 stocks within the S&P 500, have carried the market. So the S&P 500 is only the top 5 or the largest 500 companies in the US stock market. It's missing all of mid cap, it's missing all of small cap. I believe there's about 3,300 total stocks available in the stock market, and the S&P 500 is only 500 of those. So if you invest in something like the 500 index fund, and this goes for sector funds, individual companies, things like that, if you own just those positions, you have concentration risk. Your portfolio has less diversification. Now, there's a give and a take there. If the 500 index fund continues to outperform the overall market, you'll be very happy in the long run that you had that concentration risk. Because when you have concentration risk, you increase your potential ceiling for performance. And it gets even greater if you own, say, a single stock. The problem is you also increase the amount of risk within your portfolio. If you own one stock, that company can cease to exist. Think of your MCI, WorldComs. I don't know if Kodak still exists, but Kodak got tanked. Blockbusters, things like that. Companies can cease to exist. If all of your wealth is in one position, you're betting essentially that that position will, one, continue to outperform the overall market and will live forever. Now, it's not likely that these companies will end, but what is the likelihood that one company will continue to outperform the overall market? There's no real direct answer to that. So if you own everything, you're going to participate in the overall returns. Historically, and there's no guarantee this will continue, the US stock market has averaged 10% per year over the last almost 100 years. Will that continue? I don't know. I think it will, at least historically. But if you own an individual company, you're hoping that it will return more on average than the overall stock market. And statistics show that that is incredibly difficult to do over time. So for a lot of people, they can build real wealth by owning entire markets and then riding the growth over an extended period of time. Over a short period of time, it's hard to know what something's going to do, but I believe in the long run, again, that stock markets will likely be much higher 30 years from now than they will be today. So if you guys want to talk about it, we can. The performance expectations and things of the stock market, predictions, stuff like that, we can do it. But all of that is generally useless. We don't know what the markets are going to do, and anybody who tells you they know, run away. It's impossible to know. So that is the weekly market recap for the trading week ending July 10th, 2026.